Ever feel like people have some, well, interesting ideas about what counts as a risky job?
Interesting is one word for it.
We're really going to dig into that today,
Yeah.
especially like the whole trading versus running a business thing. You always hear about how awesome entrepreneurs are,
Yeah.
right?
Mhm.
But then you mention trading stocks, and suddenly it's all, oh, that's gambling, like
Yeah.
some super risky thing.
Yeah, you get that a lot.
So today we're really looking at why someone might actually see trading as the less risky option, diving into the arguments for that.
It's a good perspective to explore.
Ready to shake things up a bit.
Let's do it.
Both of the pieces we're looking at use this really interesting comparison. Imagine someone opening a restaurant versus like starting out as a day trader.
No, the restaurant example, classic. You instantly think mountains of debt, pressure to like constantly have customers,
Yeah.
or even worse, closing down because it's just not working out.
Empty tables, unsold food, the whole 9 yards.
Exactly.
And these articles don't hold back. They talk about equipment leases, ingredient costs, payroll. It's a lot for one person to handle.
It is a lot, yeah.
Then they flip it and describe the trader maybe working from home in their pajamas.
Okay, maybe not always pajamas.
Well, you get the idea.
For sure.
Setting their own hours, taking a break if the market's quiet. They highlight how much flexibility there is and how much easier it is to get started financially.
It can be a much lower barrier to entry for sure.
Right. Like you're not signing a lease or anything.
Exactly.
They specifically say a trader can start with way less money and they're only risking what's actually in their trading account.
Makes sense.
So a bad trade, yeah, that's going to sting, but you can potentially cut those losses way faster than if you had a whole business to worry about.
Right, there's less baggage, I guess you could say.
No storefront, no staff, just you and the market.
And hopefully a good strategy.
Exactly.
But it's really interesting when you see them side by side like that, the restaurant and the trader. It says a lot about how we view risk, even if we don't realize it.
It's like we're almost wired to think starting a business is this big, impressive thing, even with all the risks involved, because it's more familiar, more tangible.
Kind of like we almost romanticize the struggle in a way, you know?
And then trading, because it's less familiar, more abstract, it gets put in the gambling box, even if that's not really accurate.
Exactly. And that's where cognitive biases come into play big time.
Okay, so you're saying our brains are basically tricking us into thinking familiar risks, like the restaurant example, are less scary.
Yeah.
Even if objectively that might not be true.
You got it. We're way more likely to underestimate risks we're used to and overestimate the ones that seem weird or outside our comfort zone.
So, like, someone might be terrified of flying.
But totally fine driving like 100 miles a day.
Exactly.
Even though statistically driving is way riskier.
It's wild when you think about it. But it's not just about how we picture risk in our heads, right?
Right.
The articles also get into the specifics of how much control you actually have in each scenario, and that's where things get really interesting. One of the articles really focuses on that whole control thing, especially with like how to keep your losses in check.
Right, because that's a huge part of what risk really means when you get down to it.
Totally. So how do these articles define control mechanisms?
Basically, they're talking about the tools and plans you have to say, okay, this is the absolute most I'm willing to lose in any situation.
Makes sense.
They use the example of, say, a business owner who puts a ton of money into some big ad campaign, but it totally flops.
Oof, yeah.
That money's gone, there's no getting it back.
Nope.
But with trading, imagine you open a position and it starts going against you.
Okay. Stressful, but yeah.
But you'd set something called a stop-loss order before you even got in. So if the price drops to a certain point, you're automatically out.
So you basically set a hard limit on how much you can lose on that trade.
Exactly. You're managing the risk from the get-go.
So even though both things have risks, obviously, traders can often control how much they could lose, more so than with a traditional business.
Often, yeah, that's the argument they're making.
Interesting. One of the authors actually runs 2 businesses right now.
Oh, wow, too.
Yeah, one's a regular brick-and-mortar store, but the other's all trading-focused. And they are not happy about that whole trading is gambling stereotype.
I can see why it's a sore spot for a lot of traders, especially the ones who are really serious about it.
For sure.
Running a business, trading, both take planning, analysis, smart decisions. The time frame's different, the tools you use are different, but the core stuff, managing risk and trying to make consistent returns, that's the same.
So to be clear, these articles aren't saying trading is easy, right? Like anyone can just jump in and make a fortune.
Definitely not. They're very upfront about the fact that you need specific skills, specific knowledge. Like you got to understand how markets move, how to do technical analysis. You got to have discipline, emotional discipline. It's not a joke.
Not like throwing darts at a board and hoping for the best.
Exactly. It takes work. But the point they're making is the risk that comes with trading.
Yeah.
It's different. It's just different from running a business.
Different, but not automatically more dangerous.
Right. At the end of the day, it's all about the individual. What's their risk tolerance? What kind of person are they? What are they hoping to achieve?
Makes sense.
Some people love that fast-paced, numbers-driven trading world. Others would rather build something from the ground up, you know?
It's about finding the right fit. It's kind of crazy how much our own thoughts on risk are shaped by stuff that has nothing to do with the actual numbers. You know?
Yeah, absolutely.
Like we're talking culture, personal experiences, even just like how familiar something feels.
It's a huge part of it. And honestly, it's really important to be aware of that, whether you're into trading or starting a business or whatever.
So we're not saying there's one right answer to which one is riskier.
Yeah.
It's more about each person figuring out their own comfort zone.
100%. It all comes back to you.
Yeah.
What kind of risk are you most okay with? What are you comfortable with?
Right.
And once you figure that out, how do you actually manage that risk, no matter what you choose to do?
Which goes back to that whole cognitive bias thing again.
Yeah.
We might convince ourselves something's less risky just because it feels safer, familiar, even if that's not really true.
It's so easy to fall into that trap.
It is. So don't be afraid to question those gut feelings, right?
Exactly.
Don't let some idea you have in your head or being scared of the unknown stop you from checking out something that might be perfect for you.
Couldn't have said it better myself.
So we've talked a lot about the ins and outs of risk when it comes to trading versus running a business. What's the one thing you want our listeners to take away from this?
I think the biggest thing is to make informed decisions. Like risk is a part of life. It's going to be there, but don't just jump in blindly.
Right.
Actually learn about it. Come up with a plan for if things go wrong, and then choose the path that makes sense for you, for your goals, for how much risk you're actually willing to take.
Awesome advice. And if anyone wants to go even deeper on this whole risk management thing, whether it's for business or trading, we've got some seriously helpful resources in the show notes, so definitely check those out.
Always a good idea.
That's it for today's deep dive. Keep learning, keep asking questions, and we'll see you next time.